Welcome to Credit Connect's webinar series. My name's Colin White and I'm the founder of Credit Connect's news site, which provides media content for the lending, credit and collection sector. In the latest webinar, we will aim to examine the latest technological innovations connected to customer engagement with this session titled Agile Collections Technology that will outlive the pandemic. The presentation is sponsored by Esendex, and it will showcase some of the research that the company has found since lockdown began earlier this year. And of course, we're in now. Before we begin the discussion, I'd like to make it clear that we intend to make all of our events as interactive as possible. So please feel free to use the event dashboard that you can see on the right-hand side. You can see the Credit Connect logo. Underneath that, you've got some tabs which say Overview, which provide you background to today's event, a bit of information on Esendex as well. You've also got a resources section where it's got the contact details from myself and JT, who I'll introduce shortly. And you can use that if you've got any questions post-event. And obviously our speaker profiles, a bit more information about us, but more importantly, the Ask a Question tab. Please feel free to utilise that today. We're always interested to get your questions. I always view these events as a bit of a interactive face-to-face radio show, in the sense that we want you guys to be part of the event and ask questions and also take part in some of our polls, which will today we've decided to just flash up throughout the event. So if you can get involved with that, that'd be fantastic. If we've got any questions that you send in and we can't answer them, I'll obviously share them with JT shortly throughout the event. But if we can't answer them, we intend to, as ever, do a write-up where we give an overview of the poll results and answer some of the questions. So have a look at that for us online post-event. We hope to get that up next couple of days as well. So this session today, I've got JT from Esendex, JT Singh, sorry, from Esendex, who will provide an overview of Esendex portfolio research, and I will occasionally intervene and ask some questions as we move through the presentation. So let me hand over to JT Singh now, who's going to take over from me for a little bit. And firstly, he'll give us a bit of background about himself and Esendex, and we'll go from there. Over to you, JT.
Brilliant. Thanks, Colin. Hi, so I'm JT. I'm one of the account managers at Esendex, and I predominantly look after the collections and recovery space within the UK. But within the business, we do a lot of work within the different verticals. So utilities, telcos, public sector, that sort of stuff. Today was really an opportunity to talk to you guys about the technology that we've introduced, why we've introduced it, the value it brings, the return that we've seen off the back of it, and really an opportunity to share best practice on what we feel works and what we've seen works, with the hope that everyone can kind of benefit off the back of this. So we have pulled together a deck that we'll work through, and we'll talk through progressively throughout this webinar. And as Colin said, it's pretty interactive. So any questions that you might have, feel free to fire them through. And there is a poll as well for you guys to sort of leave your feedback against as well. So I'll get the deck on screen for you guys now, so we can start to work through that. So aside from obviously myself and where the business is, one of the key goals that we've done is positioning Esendex within that collections technology partner space. So looking at how and what we deliver and moving away from the conventional taking payments into a more ethical collections pattern. So looking at the customers that have been impacted by debt cycles, by repeat sort of problematic debt that's caused them, anxiety and that sort of stuff, and essentially how you can support that customer, rehabilitate them, get them on the right program to be financially stronger and not just make repayments on any sort of credits that they may have. So in terms of the friction points, essentially we split this into a couple of categories. For your consumers, we see the single UI as one of the most important things. So when you think about any of your sort of finance that you might have obtained, for example, the point of sale, that inception of finance is very clean. It's digital. You've got the iPads, you've got the assets in front of you. It's very easy to obtain in most cases. And the UI is smooth. A couple of clicks, a swipe, and you've you've obtained your agreements and finance. So bringing that mindset into the collection space, we feel is really important and something that we baked into our technology, so that the back end of collections, when you're going into arrears and you've defaulted, is just as smooth as that point of sale, so that you have a seamless UI all the way through. It adds familiarity. It allows customers who did, for example, use open banking to apply for financials, I don't know, whether it's secured finance, whatever it needs to be, they then have familiarity and are more likely to engage with open banking in an arrears cycle as well. From the business point of view, the natural things, you want to make sure you're reducing the cost of servicing. You're reducing the demand on your full-time employees, so that your OPEX cost is obviously increased. And then obviously your choices around investments between apps, mobile technology, and making sure you are digital and ready. But one of the most important things we've seen, the single customer view, but we also expand that into a single agent view. So yes, an agent should be able to see what their customer's portfolio looks like in terms of how the customers are engaging, what channel they're using, that sort of stuff. Having a single agent view allows the business to see how that book is being serviced, for example. And then from our point of view, from Esendex's point of view, supporting end consumers and then our customers, which are the businesses that we provide services into. So making sure we have a scalable solution, making sure we have a mobile collect proposition that just grows with your business. It adapts to regulatory change. And currently we've got loads of iterations of this on the market. So there's no one size fits all. We don't do the off the shelf mindset. A lot of our technology is built to your spec. So we look at your CRM's capability, we look at the APIs or the file or the data flow that you have available, and we then make the solution fit with what you have today and what your aspirations are for tomorrow, so that it reduces that IT and that technical demand on your side. There's a couple of slides here around the problems that it solves. So as a snapshot, on the left-hand side, you've got your conventional dialing, your outbound calls that you would have done with agents or with a telephony kit. Some of the headline stats are there. A lot of calls are ignored. Now, there's nothing wrong with dialing. It's been around for years. However, you've got to get that customer at the exact right time for them to want to engage with you, for them to answer the call. If I was to ring Colin now, the chances of him answering are zero, because he's obviously he's got an engagement already. So you've got to couple that with the cost of dialing as well. There's a lot of kit that goes into that. You've got the telephony side of things, any screen pops, any hunt groups, all the sort of stuff you have to set up against it. We've seen the average cost of taking a payment using a telephony kit at £1.25. Then on the right-hand side, you've got stuff around letters. Now, agreed, these are a necessary evil. We have to send letters out to inform customers of who you were with and who you're now placed with and that sort of stuff. But we have seen in recent months, the tone of those letters has now been a bit easier to work with. So previously they were rigid, they were quite firm, and quite demanding. And we've seen that letters have become a lot more dynamic and they fit the tone of your business better. But saying that, they still have a relatively poor open rate. Yes, they will land on doorsteps, but customers actually opening them and measuring that open rate is really important, because there is no link to click or no UI that you can carry. There's no metric you can carry through that tells you that the letter equals the engagement versus the text or the call or the email or whatever other correspondence you sent at the same time. Conversion rates are naturally quite poor. We're looking at between 5.1% for a letter compared to around 32% for a text. And response time is really slow. It can range from around 17 days on a letter compared to around 90 seconds with a text. So, and then obviously you have the natural cost against that. There's a cost of lettering that cannot be avoided. So there's some of the typical problems a mobile collections solution, a digital collections would solve. And then looking at the shift, so in terms of consumers, so we've all had it forced on us. There's not a single person that hasn't had to have a level of digital interaction since March 2020. You will see those demographics where they weren't particularly tech savvy, but because of the brands having to work remotely and having a huge inbound demand on calls with people requesting payment holidays and that sort of stuff, they've had no choice. They've had to adopt a digital way of talking to that business, and therefore the business has had to adopt a digital way of essentially like a webhook of receiving that information back from the consumer. So the use case as well for digital interactions that we've seen within Esendex is quite interesting. It's not just the ones that hit your customer contact center. We have seen the bots, chat bots, that sort of stuff, are now fulfilling those conversations a lot quicker. They alleviate a lot of the inbound demand placed on agents, but they also do a great job of deflecting those very easy interactions that could self-cure. So that's one of the big things that we've seen, not only adopting digital first as a strategy, but then using very clever digital channels to make your digital strategy stronger.
Okay. I was going to just ask on that point as well, if that's right, JT.
Yeah, sure.
You said, is there any kind of trends that your company's seen in terms of collections technology processes as a result of obviously what's gone on over the last 9 months?
There are, yeah. So, I mean, taking the sector out of it, because obviously we service multiple verticals within the business already. The biggest trends are if you take away your inbound demand, so you look at what customers are asking for today. So within car finance, we see a huge uplift of what's the settlement on my vehicle, and also can I take a payment holiday against my vehicle. Within the mortgage world, it's very much about when the stamp duty relief came in, people were jumping on applying for mortgages. So you see a lot of inbound demand, and it varies sector to sector, but essentially someone wants to talk, someone wants to interact, transact, and complete that interaction in the quickest way possible. People do have a lot of time on their hands, or at least the perception is people have a lot of time on their hands currently, but we're still busier than we ever were because the majority of people are working longer hours due to the very nature of having a 30-second commute to their office now. So what we see as a business, and the account managers do this within the relationships that they hold with our consumers at Esendex, we'll look at what the typical inbound demand is per vertical. And off the back of that, we'll then triage it with self-cure channels. They're not there to take away from business process. They're simply there to work collaboratively with it. So if the customer doesn't self-cure, you can at least get some data capture before you transfer it over to the agent. Allow them to have a warm transfer. Tell them that it's John Smith on the phone or has interacted and tried to pay and it failed. Therefore, it's a good customer that's just having some technical issues around completing that self-cure journey. So that at that point, you give a very shorter windows for the agent to interact with and get it done. Or you pass it over to a chatbot, for example. So the technology is very adaptable. It works in different verticals with different use cases. And we can go on to that in a moment when I show you some of the visuals around it as well.
Thank you.
So in terms of the, what is this? What is mobile collections? What are mobile payments? In short, it's a very efficient and clean way of interacting with your customers on a one-to-one basis, allowing them to manage their relationship with you. And it extends further than just taking a payment. So these aren't mini websites or micro journeys. They're bespoke to each customer. When the customer clicks on their version of Mobile Collect, they see what matters to them. They aren't sort of cluttered with noise and scrolling and zooming and that sort of stuff. They only see the interaction that they need to complete now to fulfill what their account is asking of them. And it also extends out of the core collections as well. So we've seen this work really well within the retail marketing sectors. It allows customers to obtain finance, borrow more, draw down on existing payments that are done. It allows them to renew their mortgages. You can have it where they are using it in an e-commerce world and setting up repayment plans and that sort of stuff, plugging into some major sort of buy now, pay later vendors as well. So it's born out of collections, but then it's grown out of that core department into the other ones that feed into conventional collections. So just a quick snapshot in terms of the modular approach that we take towards our business, and why as well. So you've got all these bubbles on screen. Essentially, these are some, not all of them, but these are just some of the channels that we have available to us today. So we'll use things like SMS and SMS chat. That will talk to our email application. So if your SMS goes undelivered, that can then trigger the email in the background, driving that mobile collect proposition to your customer. So the value to businesses working with Esendex is we can use any data set you have on your customer base without you sending repeat files over to us and saying, right, now try this one, now try this one. We hold that logic. We build that and bake it into our solutions as well. We can do your dialing. We can also do your lettering process. You're looking at financial health, intelligent income expenditures, that sort of stuff. So there is a lot of auxiliary components that talk to our mobile collect as well. So it's not just a single proposition. It's yours, built to your spec, designed by your business, and it looks at what you need today and what your roadmap looks like for the next maybe 2 to 3 years in terms of innovation. And then we bake that into it as well to make sure you have them open-ended points to grow the solution as well. And before we go into the actual visuals of the mobile collect as a typical offering, one of the important things is around how it services payments as well. So currently we can do all your conventional stuff, taking direct debits and card and that sort of stuff. And we do work with pretty much every payment service provider in the UK. So we have direct integrations into them. They all sit on a PCI level 1 environment. And we are looking at the newer ways to pay. So we're evolving what we do in terms of like using PayPal, Apple Pay, Google Pay, that sort of stuff. Because what we've seen is customers use this interaction. They tap their phone or they tap their watch when they go to a shop. So why not bake that into your technology as well so that you enhance and add to that familiarity they already have?
So I guess I wanted to find out as well whether that you've seen newer ways to pay being used on a more regular basis, I guess.
We have. So there are key sort of requirements around different verticals around what they can and can't use. And we can certainly talk to anyone that's interested in exploring what that looks like after this session. But essentially, it opens up your conventional card payments where you have reoccurring card payments or whatever format you want to do it on, tokenized payments. It just gives you a new avenue. So at the point of making the payment, the customer can choose the format they want to make that payment on. Maybe they get rewards, maybe they get cashback, or have an incentive with that payment mechanism to use it. I certainly do. I've seen that with things like credit cards, where you get air miles, although they might not be very useful right now. You can use it for cashback on bills and that sort of stuff, and then you pay it off with your debit card at the end of the month.
Yeah.
So there are potentially avenues where Apple Pay, Google Pay will offer those monthly incentives out to customers, and then that makes making a payment on your balance with X brand more appealing using these newer ways to pay as well.
Great, thank you.
In terms of who can use it, I won't labour this point because we've kind of touched on it, but key verticals that we service with this is around just your collections and recovery. So that DCA market space, whether it is as a BPO operation outsourced or whether it's an in-house solution. So when I say DCA, you've got the conventional players on the market, but then you've also got those in-house collections. So in-house within telco, in-house within utilities, in-house within local authority, that sort of stuff. And then obviously the debt purchasers as well, who we work really closely with, and we support them on their strategies too. But it extends out into insurance, lending, motor, utility, you name it. So it's very much sector agnostic in its approach. And then you've got some example visuals here. Now, I will stress the point, we don't really go down that off-the-shelf offering. We like to build it to spec. We look at your business challenge today, the business values that you need to be baked into the solution, and then we build it according to that. So the ones I'm going to show you now are kind of A happy medium, it ticks most boxes, but obviously with a pinch of salt, that this would very much be tailored to your business if it were to go into production. Typically, you'd have something like what you're seeing on screen right now. Off screen, you have that triggering, whether it's a WhatsApp, text, email, iMessage, whatever it needs to be. And if it's RCS, it'll be an inline message, everything you're seeing here, rather than a link. So it alleviates a lot of those phishing sort of attempts. Customers can do validation on whatever channel you see fit, however you want to ask them to validate. Esendex has a professional services team that sits behind this technology, and they'll guide you on what works. So, for example, asking for your 36-digit reference number for your mortgage account probably isn't going to work. So we'll offer you the best chance for customers to engage and carry on and not drop off. You also have things around when we service mortgage customers, for example, joint applications and that sort of stuff. Then the screen on the right, that's where your self-service offering really kicks in and takes shape. So we move away from we've got a number of buttons on screen there right now, but typically you'd have the ones that actually matter to you today. So Colin, yours might be to make your payment right now, or to view your health score, for example. Mine might be to do my periodic I&E based on my payment arrangement. So I'll hit a 6-month flag, and that will then say, can you still afford to pay what you're doing? So those buttons flex and adapt based on what the business needs that customer to do, so that there's no deviation, there's no options to kind of navigate to the wrong point. From a payment world, so typical example, we'd show things like, your settlement, how much you've agreed to pay, and the customer can then choose what they want to pay against, and also how they want to get their receipts and that sort of stuff. So it's great for data integrity and data capture at this point, because the customer is very likely to give you good data when it comes to receipts. And then that middle screen, this is just an example UI. How do you want to pay? Tokenized payment, using newer ways to pay, and that sort of stuff. And then just go into PCI environments to take payments. Good thing here, it can talk to CRMs in real time. So we can do that API postback that will say the payment has been made, the auth code equals, and that can talk to chat products and auto close the conversation. Should this have been, if it was initiated between a bot, an agent, and your end consumer, it can do the auth code stamped into that chat conversation and therefore close it off as payment made. Thank you very much. Equally, it'll post back to your CRM, update it in real time. So should that customer drop out of the journey and make a phone call, the agents can see that the payment was successful, and they can talk to that customer accordingly. In terms of the things like payment plans, so these are intelligent repayment plans. We do see a lot of the £1 a month for 300 years, and that's great. I get that. You have to accept it in some instances, but the purpose of our mobile collect technology isn't simply to service customers; it's to help them. We need to make sure we're getting them out of any financial hardship that they may be seeing right now. So offering intelligent plans, spreading the balance over 6, 12, 18, 24 months with sensible repayment options. Customers can override them if they need to, and to see if they feel that's the right thing to do. But it gives them a way of clearing that balance sooner and being debt-free sooner. Equally, we'll sync this up to the customer's phone. So as a business, you don't have to remind them 12 times a year. The phone does that for them. That's saving a chunk of money in terms of the sort of pre-delinquency piece. And the customer can then go in and edit those plans. When they click the edit button on the right-hand side, that would pop up a little calendar. There'll be grayed out dates where they can't choose where they're going to move their plan towards. But equally, there'll be ones that they can move it towards. If they choose to cancel it altogether, you have to go to that previous screen and make an advance payment. And obviously, you can use direct debit or card, all that sort of stuff. And then if you are going to go on the direct debit route, a really cool thing we've done is start to download those direct debit mandates to customers' phones as PDFs. So rather than every time you used to set up a direct debit many moons ago and you'd get a letter in the post with a direct debit mandate guarantee, you don't need to do that anymore. You can just send it via a PDF, and that allows the customer to see it. as a business, you also get that audit trail. The customers progress through the journey, they've passed DPA, they've entered all the information correctly, they've then gone and set up a direct debit, the mod checks have been done to make sure it's valid data, post back to a CRM to set it up, and they've downloaded the PDF. So it's an end-to-end digital journey, no letters, and the customers self-cured the entire route.
Okay, JT, quick one. I was going to say, so from a collector's perspective, does this technology, does it talk well to like new and legacy CRM systems? How does that work? Yes.
Yeah, it certainly does. It's a good question as well, actually. So I kind of touched on it previously around everything's built to spec. Now, when we build these solutions for you, you can tear these out. You can say, I need a direct debit solution to complement my in-house collection solution. That's fine. You tear out the section you're seeing on screen now, and you incorporate it into your journey. In terms of posting back to CRMs, new and old, we've done countless integrations. We've got a lot of variations of this solution on the market right now, and we've worked with most of the major legacy CRMs already. So we have the integration points already available. With the newer ones, if anything, it's a blessing. They're a lot easier to work with. And we have, like I said, a professional services team that will look at all API integrations, data flow between the brand and Esendex, how that pre-populates data, how it pulls back data, how it validates, and how it posts back as well. So it is a full end-to-end seamless data flow. It goes in a ring and it allows the customer to progress seamlessly as well. But more importantly, it allows that business to see in real time where that customer's got to and what's been done. That will then allow your contact strategy to be ceased. It will allow any sort of blacklist to be set up for limiting over communication. It will also then mean that you can close off anyone that was in your dialer queue, for example, to be called out today. So you can then proactively shrink your contacts that need to be done per day. There's a bit about INEs, so affordability checks. Now, there's so many versions of this. I've seen absolutely loads of them. Standard financial statements or common financial statements, as they're known as, 136 questions long, right down to those that will use open banking, that will give you that key insight around things like payment holidays, pre-populated forms, using bureau data. I've even seen one that says, can you afford this much, yes or no? So you've got that entire spectrum, a really heavy duty one that has loads of drop off on it, right down to a one button, are you good to go? We can work with whatever your business sees fit. The one you're seeing on screen will typically pre-populate the data on screen for you. That will then talk to your payment arrangements and payment amounts that you can and can't do. So these modular approaches actually talk to the rest of the Collect platform, allowing that customer to be safe in the respect of making sure they're not overcommitting. Equally, if their disposable income is £500 a month and they choose to pay £10 a month, you can ask them the prompt, are you sure? Because this will mean you will be debt-free in versus date. It's very emotive, but it has a very positive return in terms of getting customers to pay down more as long as they can afford to do so. And obviously, they give you the full audit trail with most INEs. And some of the newer parts that we've done is around financial well-being. So it's not, like I said, this isn't just built to service payments. This is built to make sure that customers are treated properly and they're put on that program of rehabilitation where they can make sure they are financially stronger. One of the things we do see, if a customer has arrears and they are placed with, for example, a DCA, they're more likely to be placed with several DCAs for a lot of their accounts. And it creates a bit of a spiral where there's no real end in sight. There's no goal of how you get out of this sort of tunnel. So creating financial wellness scores around how you're doing in terms of that single account that is now placed with, or that in-house collections piece where you're trying to rehabilitate the customer. It's a great way of making sure that they are put on a program. And it's something that we're committed to keep, investing into heavily to make sure that customers aren't just a commodity where they are making payments. They're also a human behind that needs to feel valued. They need to feel like they have a means of talking to somebody. And a lot of the DCAs that I work with, and I'm very close to, They do one of the best jobs I've seen of helping customers, but formalizing it into a plan that they can see on screen. It's a great way of actually making it real, seeing it and seeing how well you're doing, and seeing how you can actually increase what you're doing. So right now, this example says you're doing great, you're doing good. How do you get to great? And that would be X, Y, and Z, and it will show you on other screens that we haven't shown for obvious reasons.
Okay, I was going to ask on that note as well. So with obviously the pandemic and the payment holidays and things like that, I guess you're having to adjust this system. And are you seeing any trends in these kind of things being installed with a lot of your clients with regards to payment holidays and stuff?
Loads. So one of the things that happened when the payment holidays were announced, and I'll say holiday version 1 in, I think it was April now.
Yeah.
Everyone flooded the market and they were entitled to it. And what that meant was, in the nicest way, whether you needed it or not, it was made available to you. If you felt your job was at risk, you were in hardship, that sort of stuff, you couldn't work because of COVID, etc. Now, it was a default blanket. Anyone that applies will get it. We have to honor it as a financial institution because it's been forced upon us. And that's fine. But making sure that customer at the end of those 3 months was aware of the implications, that wasn't very forthcoming, I don't believe. And that's from talking to tier 2 banks, for example, a lot of the mortgage market. They openly have, in a roundabout way, sort of highlighted they had to offer these out, and therefore the customers was just snapping them up and taking them up. Now, we make sure our journeys accommodate for, yes, you can take a holiday, but did you know it means X, Y, and Z? How are you going to make up the deficit of the interest that's accrued over 3 months or 6 months or 9 months, depending on how long your holiday's been? What are your plans to do so? Are you in a stable job? Have you got any confirmation from your employer about where you see yourself being, where the business sees itself being? All these sorts of intricate questions, which you'd get on any financial application if you were to do it in the last 5 years, making sure that you are a good customer to lend to. Equally, to freeze your payments, what are you going to do when your payments unfreeze? Are you going to be in a worse position? Is this actually going to compound your position and make it worse for you? Is this actually breathing space, or is it delaying a bigger problem that's going to surface because of this? So our mobile journeys basically ask those very harsh questions, and they make sure that you've got every stone uncovered and the customer's fully informed and not just allowed to accept anything. And there's recent stuff. We know that bureaus didn't see a lot of that stuff around payment holidays being taken, but open banking does. And open banking, for all the good it can achieve, does have applications where lenders can see that that mortgage payment of $495 a month stopped for 3 months. Therefore, that customer would have applied for a holiday. Therefore, they've had hardship. Therefore, maybe I will not give them the best product I can give them. So you have to look at the implications of, and kind of just give full disclosure. Why would you not tell your customer this thing you're about to do might hurt you? The whole point of financial well-being is to give full disclosure and make sure you give them every possible chance to be successful financially, because it's in your interest. If your customer is doing well, they're going to spend with you, repay with you, borrow from you. If they're not in a good place, you're only going to compound their situation.
And I guess you're having to adapt your technology to make these changes, I guess, in that sense.
We are, yeah. So we've had loads of requests from the initial sort of version that we had of our payment holiday solution. We ended up having probably, there was upwards of like 20 of these in terms of the different calls to action that they serviced. And it wasn't just, some were data capture, some were actually applying that holiday into the account. So having the real-time post back in the CRM to freeze any further communication around repayments and that sort of stuff. So we adapt it pretty quickly. And the reason we do that, and we do it very well, is because we have a modular approach to our tech. So the mobile journeys that build the core backbone of our mobile collect proposition, you can take out pages and reinsert them in very easily, within a matter of days, for example. So we're able to be pretty agile to industry change and expectations from Esendex as well.
Cool.
And the last sort of screen around the mobile collect proposition is around talking. So everything so far has been around self-cure, but there is a need to talk. And whether that's a secure chat on WhatsApp or text or whatever, whether you need to call, there's a number of things you can do here. And again, these menu options flex and grow and shrink depending on the customer and what their options available to them are. There's also things around financial hardship. If that customer feels that this is getting too much, my financial well-being is like, it's red, it's poor, I can't make my repayments, I can't even pay what you're asking of me today. We have a duty of care. As a technology provider servicing a collections market in the UK, we have a duty of care to offer those channels out and to help that customer get back on their feet. So we always bake in things like financial hardship. There's an example of payment holiday requests and that sort of stuff. If you want an extension on any payments, they're all kind of there as well in a sort of contact piece. And then to touch on the non-collections world, stuff around customer retention. So very simple UI. If a customer is paid down on an arrangement that they've got with you, for example, this is a pretty competitive market to borrow money in. Interest rates are really low, and a lot of customers can easily deviate from your books onto your competitions. So if they've already paid down, that could be a potential way of releasing funds. You know about the customer, you know their history from the application, you know their payment history. The chance of them being approved is much higher. So this is where you can be pretty smart and keep them as your customer because they've obviously built a relationship with you. So that's Mobile Collect. Now, there's about 20 other slides that I've not shown for obvious reasons, due to the IP and that sort of stuff and the sensitive nature of them. The stuff you've seen is relatively generic, and we've done that on purpose to make sure we kind of tailor for the whole of the audience and the verticals that they've come from and the markets that they serve. So any questions around those, we can field those on the Q&A piece within the webinar or after the session if needs be. There is a bit around the other added value of Esendex. So things around protecting your brand. So a key example here is things like verified text versus a conventional text message. So one of the things we see on Android is that Google has certain algorithms, and obviously they won't disclose them to us, but if you trigger those algorithms by sending certain types of messages, it can display things like spam banners on the customer's smartphone, which is what you're seeing on the left-hand side. Now, immediately, if you're trying to get someone to self-cure and engage with your portal, having a text that says, this might be spam, click on this link, isn't going to do anyone any favors. So one of the things we do as a business is we can register you with Google. That will then give you on the far right-hand side, that verified shield, where if you click into it, it shows registered address, phone number, the usual stuff. But you also carry through your logo on what is a normal text message. So your smartphone has that capability built into it. Why not use it? The customer can see your logo. They've already seen that on letters when they took out the finance. It adds familiarity. Off the back of that, the chance of engagement is far greater. So they can see the little fav icons and the stuff that's pulled through on URLs. So there's a lot of stuff that we can do outside of our collections technology that helps to complement that tech and further increase ROI off the back of it as well. And then in terms of everything we touched on so far is around your end user. They've got this amazing experience, a portal that does everything for them, 2 clicks, swipe, they've paid, they've set up plans, that sort of stuff. Your business is just as important to us. You are our first customer. That's one of the things to remember. So having things like dashboards that matter to you, having things that show whatever metrics that the business wants to see, whether it's your INEs or your payment plan stats, having things around message engagement rates in real time, so you can see what actually matters to the business, what works, what doesn't, and you can flex and adapt your contact strategy according to that. You can also have things around, on the left-hand side, you've got the customer view. So an agent would see from a single customer when they logged in, when they logged out, when they set up a plan, when they've completed an ironing, that sort of stuff. On the right-hand side, us as a business would generate work queues. So these are tailored work queues that go into your dialer or your screen pop or whatever it needs to go into from your customer point of view. And that will be anyone that, for example, here, if you've got offers for settlements, that'll go into a dedicated agent skill set that knows how to manage that conversation. Anyone that says, I've got to change X, Y, and Z, I can go into trace teams to make sure that they're verified before they change. Income expenditures with crazy results, I can go into a certain team where they can triage it and say you put a 0 in the wrong place. All those little things that can really help a business as well. So it's not just API postbacks, it's not just CSV reports. Dashboards are available to the businesses as well. And we've seen them work really well from a management point of view, from sort of QBRs and quarterly business packs, looking at performance of Esendex in supporting the business. The dashboards do a great job because they just give you the real-time stats there, and then you can drill down into any of them. And then coming towards the end, just a bit about typical ROI. So this is blended results given over a set time frame, just so that it's clear. But we're looking at things like mobile collect working in the utilities world versus households. So looking at debt very much in the utilities and household space, you can see engagement rates, so text sent versus text delivered, mobile collect solutions open, and then payment attempts off the back of that. So you can see that waterfall progression, and this gives you a true reflection of what proportion of your book would self-cure, and therefore what proportion you can then feed into your dialer queues for your conventional context strategy. Stuff around the motor finance world versus unsecured, so essentially secured and unsecured, and looking at the differences there. And you can see that motor finance has a huge spike when using mobile collect. You can do so many cool little tricks with this in terms of making the ROI bump up. Being creative visually on the mobile collect solution makes a big difference. We can talk to any sort of prospective brands that want to talk to us about that. Then you've got a bit around DCA and debt purchase versus white label and BPO. So you can, again, we can share these slides out with anyone that requests it at the end of this as well. And then just to sort of tie it all up, the typical case study that we had using mobile collect in action. So in short, Empower was using our solution and they were seeing 4% of customers that they engaged with making a full payment on their account. This was in, I believe, in the B2B world. And then it went into, an increase of 15% off the back of that. So 19% using our solution. And that was with very much no FTE resource demand and just using more intelligent self-cure channels. That, I believe, is then obviously rolled out into the B2C market and so on. And it's just sort of blown up from there. And just as a closing slide, why Esendex? So some of the stuff I've touched on, but speed of delivery is really important. And that's one thing that we do pride ourselves on. So we're not we don't take months and quarters. We're simply not in that space. We appreciate the need for a very agile solution. And we built it to cater, essentially cater for that market. We understand your business. We understand the CRMs. We know why you talk to customers, what you can and can't do, what actually works versus what is just a blanket communication strategy. And we've got a lot of experience in terms of the brands that we work with, and we've grown with them. So together as a partnership, we've worked with a lot of the DCA and debt purchase market, for example, and we've grown with them over the years. And it's always important to look at the vendors that you're working with. There's loads of guys that do portals. There's a lot of very good portals on the market as well. One of the sort of added values Esendex brings, we do that messaging part in and out, as well as the fulfillment and execution of the portals. And these can have any number of channels in, whether it's IP channels using WhatsApp or iMessage or whatever. And we can be pretty smart with that because we've got a dedicated IP sort of integration team and R&D team as well. So that's, in terms of the deck, that was pretty much everything I wanted to touch on.
Okay. Brilliant. Good stuff. Appreciate that. That's really, really good, really interesting. Hope everybody out there's learned something, gained a bit of insight today. I have got a couple of, 3 questions that have come in. First one, if you don't mind answering them, we've got a bit of time. What impact do you think artificial intelligence and machine learning could have on digital collections, digital collection payment transactions in the future? Any thoughts on how AI and ML could impact that?
Yeah, I've been asked this quite a lot, actually. So I suppose really looking at AI is great. I've seen it work where brands will use it for their internal process, not their external customer facing side. And it enhances what their contact strategy should look like, what they should do tomorrow, what channels they should use to engage with, and that sort of stuff.
Mm-hmm.
So from a management point of view, business improvement point of view, is great. You have to look at what your CRMs can consume. So it's great having AI public facing, customer facing, but if you can't, of all the variables are going to kick back at you, if you can't do anything with them, then there's no point having that data dump, that metadata fed back into the business. A lot of the brands we work with, they don't want to give up the control of their business strategies. They want to be able to control them and have a vendor that does a very good job of executing and fulfilling them. Because if Esendex is fulfilling that solution off the back of automations that have a defined finite framework, for example, it means they know exactly what MI they're going to get back. They know exactly what to do with that MI and how to make tomorrow better. If you're going to feed in a load of AI, for example, it will work, but you've got to do a hell of a lot of work to make sure you can accommodate all the variables it's going to throw back into the business. So there's pros and cons to it. Ask me in 2 years and 100%. AI will be great. This is asking me about electric windows 10 years ago in cars. It was expensive and no one knew what to do. Now it's expected. Yeah,
it's interesting because we obviously run the Credit and Collections Technology Awards, and we get quite a lot of entries, especially the first year we ran the awards and didn't have an AI and ML category, and everybody was keen to mention it in their entry. And then the second year, where we really drilled down into it, it was less mentioned. And I think it's really important not to just throw out buzzwords and really make sure that you can deliver on these things before you say it's part of your portfolio, I guess. So yeah, that's interesting.
It is. It certainly is. So one of the things around AI just sort of sprung to mind, and I mentioned it around business control. So there's very few brands out there that would be very happy to allow upstream vendors to do any communication, for example, or have portals that adapt beyond what they feel is okay, or ring-fenced, for a better word. So working within parameters is really important. And for one of the brands we work with, for example, for them to be able to control what we do reactively on their end and we execute it, is that perfect harmony that they've seen work very well.
Good. Time for one more question, if that's all right. So how does technology talk to newer customer engagement channels like RCS? RCS as well.
So we've done a lot of work on RCS. I believe we've been one of the key runners and pioneers in the UK in getting this to market. So the best thing about RCS, there's no link to click. So that single friction point on most of the customer contact right now is you've got a text or an email, click the link to access X, Y, and Z. RCS gives you that inline message, and our technology works with RCS. So everything you just saw now in that progressive journey flow, it will be in an inline message where it will do the scrolling through, for example. And the other benefit of RCS there would be that customers can then revisit that message in their phone, click, make a payment, and it will do the API call to say you don't owe anything today. So what you're going to do is create a forever portal for that customer to interact with. So essentially, they wouldn't ever need to have a contact strategy from the business to reach out to them unless they went into arrears, for example.
Okay, no, brilliant. Okay, I think we'll round off there if that's all right with you, JT. Just running a bit short on time. I'd like to obviously round up this discussion and thank by JT and all of everybody who's tuned in today, and all of our events that we've kind of created over the last year or so. We appreciate everybody's support this year. It's been a tough year for everybody, and we really hope to see more events like this, I think, as a staple moving forward. So thank you for everybody for tuning in from that perspective. If you've missed any parts of this webinar, we will try and repeat it. We're going to do a bit of a write-up. There's a couple of questions I've just got in as well that we'll include in there as well, maybe round up some of the poll results as well. If you've got any questions directly, obviously have a look at our resources tab, send myself and JT a message, and we can you can talk to them himself or myself about that. We hope you enjoyed the webinar, of course, and you'll join us in 2021 for virtual events that we've got planned. We've got quite a lot coming up that we will announce soon, and who knows, maybe some face-to-face events might come back next year. But doesn't look too likely at the minute based on our day-to-day conversations, but we'll see what happens. Don't forget to stay tuned to our news site as well. Just seen an interesting story break about Barclays and a fine from the FCA, so we'll get that up shortly. That would be interesting. And we're going to run and publish soon, hopefully the end of this week, our review of the Credit Collections Technology Awards and our company power list, which includes Esendex this year. So that's good news for you guys. But for now, I'd like to end by personally wishing everybody a Merry Christmas. Seems really early, and a Happy New Year. And from JT and myself, I'd like to say goodbye. So thanks a lot, everybody. Goodbye.
Thank you.